Hello and welcome. My name is Tim Lee, and this is Tim Lee's Investing Resource channel. Thank you for joining us today. Today we have a special presentation by management from Chesapeake Gold, that's CKG on the Venture Exchange. Chesapeake is focused on development of a very large deposit in Mexico, one of the largest undeveloped gold-silver deposits globally. As well, they have a unique story with unique technology that they are advancing that could potentially unlock the ability to heap leach refractory precious metals ore. Now, I will remind viewers this is not formal investment advice. Definitely do your own due diligence and particularly investing in the treacherous space of junior mining stocks and seek professional advice before investing. So, without further ado, I'd like to welcome John-Paul Tsotsos, the CEO of Chesapeake, as well Justin Black, the Chief Metallurgical Officer. Take it away, gentlemen.
Yeah, thank you so much, Tim. And thank you for having us and allowing us to tell the story about Chesapeake, Metates, and our proprietary technology. So I thought before we just jump into it, just a quick little background just for your viewers. So I'm actually a geologist. I did my undergrad and master's at the University of Toronto. I worked at several companies, getting on-the-ground experience, taking projects from early discovery all the way through to feasibility study. And then I transitioned through an MBA at the University of Alberta to the finance side of the business. Worked at BMO Capital Markets and equity research for several years. Followed by some time at Hudbay Minerals, about 6 years, executing on the strategy there. And now at Chesapeake, I've been here almost 3 years now, and I'm the Chief Executive Officer. Justin, you want to give a little bit of your background?
Sure. I'm a long-time metallurgist, chemical engineer background. Worked as a consultant in the industry a lot of years, bringing projects all the way from scoping to commissioning. And then eventually I joined on the production side, process management at a gold mine, gold and silver. And somewhere along the way, I got involved with the development of this heap oxidation technology back as a consultant and then an employee of the original company developing it. And I'm happy to continue that story with Chesapeake.
So I guess the first thing before we jump into it, we're very proud to be included within the TSX Venture 50. That was announced last week. We were one of 50 out of 1,600 companies that performed extremely well last year with a 388% return on investment with our shares, and I think it was a 415% return on our market cap. So. We're very pleased with the outcome of last year, and we're looking forward to this year having another stellar year. So there's some cautionary notes. I know Tim gave the overview of getting investment advice. These cautionary notes are for the same purposes. So Chesapeake really is a story of three assets. The first is Metates, one of the largest endowments of silver and gold, which we'll go into in a second. The deposit also has refractory precious metals, which is one of the reasons why, after it was discovered in the 1980s, it hasn't been developed since. The second part of our company is a technology that unlocks refractory precious metals, and this is the perfect deposit to test the technology and advance the technology further. But we're doing more work with that, which we'll go through in a minute. The third asset, which we won't touch on very much here, is a brand new discovery called Lucy, and it's really high-grade gold right near surface. Several holes hitting mineralization within the first 25 meters from surface. So it's a very exciting project, and we've already been able to delineate over 700 meters of mineralization along strike. Finally, we're well funded. I know it shows that we have 10 million in the treasury here. We've just closed a financing, 20 million. It was a bought deal with Eric Sprott on the side, topping up his position to maintain his pro rata ownership, bringing in about another 20 million. So we're well financed for this year, and several of our strategic objectives as well as the coming years. So Eric's one of our top shareholders, Sun Valley, and a bunch of our directors and managers. And when you add them all together, that's over 35% of the company is held by these groups. So like I said, Chesapeake is one of the largest endowments of precious metals. This chart just highlights the fact that we're number one in silver. On the gold side, we've been ranked number 18. So it's a very exciting project that we have as Metates in Mexico, and we're looking to advance it through our technology. So about the technology, nature, and I'm sure Tim, talks about this in his investment advice videos. Nature naturally causes these sulfide deposits to transform into oxide deposit over 100 million years. A project like Metates, we're not going to wait 100 million years for that to happen naturally. And so we've, developed our own technology that can do the same process within months. There was a report done by McKinsey & Company that looked at all of the ounces globally, and out of the 2.6 billion ounces in situ and reserves and resources, of that 1/4 of those resources were identified as being refractory. So we did the simple math for everyone on the left here. So you do 1/4 is about 580 million ounces. You multiply it by $3,000 gold, which is the long-term price, and it's a $1.7 trillion market that we're looking to target with the technology. Another caveat is in the report, they highlight the fact that these refractory deposits that aren't developed, they end up sitting in the ground. They typically, on average, are higher grade, almost double the grade as non-refractory, so 2.25 grams per ton versus 1.21, which gives us a lot of margin to work at. The most important thing about the company and the work that we've been doing is we consolidated the technology about 2 years ago, bringing everything in-house. We've been protecting the technology through the IP that we purchased, but also through new IP and new patents that we've been filing over the last 2 years. And we've also brought in-house experience like Justin Black onto the team, who has worked with the technology with a previous employer, as well as it's successfully shown to have worked at Chesapeake as well as the predecessor, which is Hycroft, which I'll let Justin go through.
Absolutely. So Hycroft is where I first got involved in the technology. It's been about 10 years now. And we were taking the ore from an asset where the oxide had been mined out and a lot of refractory ounces were still in the ground. And there was infrastructure on site to continue heap leaching, but we needed a process to make that refractory actually recover economically. So we, did column tests that scaled into larger and larger tests, eventually test heaps, 5,000 ton, 50,000 ton, and then eventually just commercial production. We had almost 1 million tons crushing. And what's really an uncomplicated process from an infrastructure standpoint, you're basically doing your normal heap leach with different reagents and a longer time period and some management. And so that being successful, really, that's why I've been so invested in the technology for so long. We ran into COVID, kind of a speed bump for the technology. But luckily, at the time that COVID wound down the Hycroft operation, Alderley and Alan Pangborn, the previous CEO, had gotten a license and continued the work on Metates, which we're in the process of kind of finishing off right now with an ongoing test program. And so we've got 2 assets that we know the technology works very well, takes recoveries from the low 20-30% out of the ground to a more economic 70+% for both of these deposits. And we're pushing those forward, but we're also looking at other properties in the market. And this timeline's all laid out for the development, which when you really look at it, it's about 10 years of development, many third parties involved to give credibility, and about $50 million invested. So what it does for a project, especially, Metates, JP mentioned it's been in development since the 80s. That refractory gold is a difficult thing to get into without going down the autoclave route, at least traditionally. So you build a larger and larger project to support the IRR for CapEx that demands large amounts of ore through the mill, water, electricity, the infrastructure for where Metates is to get enough water to run a mill required a desalination plant, power plant. And that's a typical story for a roaster or an autoclave project had us at $3.5 billion back in 2016. We revisited the project under the lens of heap oxidation, the technology that we'd successfully run at Highcroft, and it was a 10x decrease in capex that allowed only on a quarter of the deposit a 31-year life, a much smaller kind of a starter project, but it spun out a lot of cash, a lot more attractive IRR, and this was all at much less attractive metal prices back in the 2020-21 period. Let's go. So yeah, the less attractive metal prices here. I think it was $1,600 gold and $22 silver.
Yeah.
JP, anything else you want to say on that?
Yeah, and the key thing here, if you look at the life of mine all-in sustaining costs, they're around $750 an ounce. That's first quartile. So that's a very exciting place to be on the cost curve. And as you know, at $1,600 gold and $22 silver, 1.1 billion pre-tax MPV with a 35% IRR is very exciting. When metal prices have moved where they have over the last 4 years, we can only see potentially upside from where we're at.
Mm-hmm. So this is what I was talking about for the recovery improvement. This is the one of the first phases of testing on Metates after it transitioned from really a Highcroft focused technology to expanding in the industry, and now really Metates is a focus now that the technology's in-house with Chesapeake. But if you take Metates ore right out of the ground, throw it on a heap and leach it, we were looking at about a third of the gold and silver would come out, which, especially at the prices we were working at back in 21, was not very economic. If you oxidize it, over up to 200 days is what we did for the test we're showing here. We got about 74% gold recovery and about half of the silver. And silver has a longer recovery kinetic, so we expect, that'd be better. Columns usually cut it short. But that recovery is much more economic. You can make a lot lower grades work and, make a lot of different pits work that wouldn't have worked at the low metal price and the low recovery. And so we're obviously in the process of improving all this in the lab. And so that's one of the catalysts we have coming up. But this is the big thing, is this recovery improvement is something that we've found to be true of all the deposits we've tested it on. We've selected refractory deposits where we know sulfide and gold may be associated, but for that profile, it's been very successful.
And the other thing key to note here is, standard heap leach, you're usually getting similar kind of recoveries over the same time period. So we're in the ballpark, the same place. So any oxide operation over about 200 days, you'll get the same sort of 70 to 80% gold recovery. So we're definitely in a good place here to start the technology.
Great. And you had mentioned silver there. How do the silver recoveries compare to typical heap leach operations out there?
Yeah. For a lot of oxide leaches, your silver recovery, it's just really mineralogy and deportment dependent. But the deposits I've worked on, this is a reasonable comparison, even a little bit better recovery post-oxidation. The ultimate recovery for silver, I wouldn't say we've demonstrated yet, because that's quite often like a 3-year curve. So I think there's some upside on the silver that we've shown.
Okay, great.
And we were prioritizing the gold recovery. Just for reference for our viewers, 70% of our value is in the gold. So just put that in perspective. That's where the focus of those earlier phases of test work and the current work that we're doing now, we put some consideration in for the silver to improve.
There's a heavy focus on silver improvement in this round, and it's I think it'll be successful. So the next round of graphs that come out, they'll look a little different. And to feed those improving graphs, what we're seeing here, these are actually a little bit older pictures, but they are of the lab in the current program that's going on. So what we see on the right is our variability columns. They cover a good sampling of all of our mine plan, especially for that 2021 PEA. They start out basically gray-brown out of the ground. As they oxidize, they get a very rust red, and our lab is full of nothing but rust red rock right now. Then on the left, besides the variability, we're demonstrating the technology at the full stack height for our heap. So we're looking at about a 20-foot oxidation pad, which is what you see on those columns on the left. The exciting thing is the first of those columns is actually coming down tomorrow. So it won't be long before I get to talk about those, I think. but I'm expecting good results, some success there. And we've all of this is just Metates that we're showing in front of us, but we also have some partners that we're confidentially working with in this same lab where we're running a baseline cyanidation column next to our oxidation technology to demonstrate the potential at their projects so that they can look at hosting a pilot plan or expanding into a larger variability study and finding a good way to access the precious metals in their refractory deposit.
And what makes it so excited about those other projects is the fact that a lot of them they're either operating currently or they're in care and maintenance or a previous operator. So a lot of the infrastructure is already in place, the equipment and the personnel, which allows us to fast track.
So this is from our PEA. It's an easy to understand, I think, layout of what a project looks like when it's using our oxidation technology. You've got the pits on the bottom right, the concentric circles. They're feeding to a crusher. We look at what we think will typically be a 3-stage crush to about 3/8 inch P80. That's what we've done in a lot of our work in the past. And that is loaded onto a heap oxidation pad after an agglomeration with our proprietary reagents. It spends, anywhere from 120 to 200 days from our last round of studies. And while it's oxidizing, we're continuing to fill that pad. When the pad's full, we'll go back and use a rotary shovel or trucks, depending on the site, to pick up that first cell of material that's oxidized, transfer it to the cyanide leach pad, and that's where it spends the rest of its life. From there on, you're just looking at your typical gold or silver cyanide heap leach recovery process. So Merrill-Crowe, carbon, whatever you typically use at the end of your heap, depending on your gold-silver ratios. And the chemistry we use is really non-hazardous, especially compared to some of the things that are in the industry. And downstream, no consequences because of the way that we transition it from the heap ox pad to the heap cyanidation.
Okay. And I guess one question I'd have is about, obviously, with heap leach, an issue sometimes can be essentially, does the fluid percolate through easily? If there's too much clay or other material, do you have any issues with that, or does it seem like material that would flow easily?
So for Metates, we don't have an issue. That's always a concern at different properties, and because we're looking at so many as potential partners, that's one of the things that we consider. But the 3/8 inch isn't too fine, and we've had some success at 1/2 inch and even a little bit coarser crush. So if we run into someone who has some clay, but the oxidation potential is there, I'm sure we can find a happy medium where the crush size still allows oxidation and heap stability and permeability to all be considered.
Okay, great.
All right. So the other additional benefit of this technology, as Justin mentioned, we went down the autoclave route, back in the day at Chesapeake with Metates. And as Justin highlighted, as you continue to go down this POX autoclave, scaling becomes something that is just natural in the process because you need to continue to increase the size of the operation in order to get that rate of return. And as that happens, obviously the capex goes up. But for everyone's sake here, what it looked like was, for an autoclave system, we needed to have a desalination plant over at the Pacific. We needed to pipe water in. So lots of water consumption required in an autoclave system. There was also a power plant on site that needed to be built. So a lot of energy use is required. And then to run all that equipment for a 90,000 ton operation, there's lots of GHG emissions that are also produced in the process. Now, when you switch that over to a heap leach, we're bringing that scale down to 15,000 tons per day as a starter operation. And when you're running that sort of size operation, the amount of water required is much lower. There's no flotation in a heap leach process. And so very little water is required because there's no flotation. The also benefit is there's no tailings facility too. When it comes to energy, it's actually the chemistry that we're putting in there that's putting the energy into the system to cause the oxidation. And then we do the cyanidation part of it. But again, it's not energy to move a bunch of equipment and processing equipment. A lot of the energy is chemical. And then the final part here is GHG emissions. If you're removing a whole bunch of that equipment, the GHG emission obviously comes down significantly. And so what I'm showing here on the graphs on the right-hand side, these are Barrick's numbers from the 2024 sustainability report. And Pueblo Viejo is an autoclave system, where Veradero, Argentina, is just a heap leach. And you can see when you compare apples to apples on number of ounces produced, or per ounce produced, you can see that way less water consumption in a heap leach environment, way less energy requirement, and then the GHG emission is significantly lower. So our technology really operates on the right-hand side of these charts. And all the traditional technology for refractory, whether that's autoclaves, roasters, BIOX, all of those require water in order to do a flotation, in order to get a concentrate. And it's that concentrate that is then used and processed. And so once you remove the flotation, that brings down the water, brings down the GHG emissions, brings down the energy as well. And for the ones that are just producing, yeah, and for the ones that are producing a concentrate and shipping it overseas, you're producing those GHG emissions in a refiner smelter overseas. It's still there. It's still going into the global ecosystem. Where in our case, we're producing a bar of gold or silver doré at the final step. So way less, environmental footprint impact with our technology. So just to go through the upcoming catalysts for Chesapeake here. So Justin mentioned that we have those large diameter columns. We have a whole bunch of variability columns. Those are ongoing right now. A bunch of it's being switched over to the heap leach part of it, the cyanidation phase, and we're expecting results from that work probably in the next few months here, probably end of first quarter, start of second quarter. Following that is the work from the third-party test work. That's probably about mid-year. Those results will be coming in. So that really highlights the technology and the next steps there. And then on the back of that, once we get results back from the third party, there'll be a bunch of additional updates on progress with these third parties and what we're doing next, as well as bringing other third parties in the lab. We're working to continue to fill out the pipeline for our third party test work. And it'll be obviously very, very helpful to have positive results out from other third parties. They'll definitely start to put together a lineup for additional people trying to do test work. Lucy, we didn't talk about it very much, but there's still ongoing work there. There's a big soil geochem program that's happening across the property. We're looking to put an update out on that, and then looking to get back in there with a drill bit and do some more drilling in the near future. Finally, San Vicente 3, it's one of our concessions that we're working on with the federal government. Unfortunately, a few years back, we lost the claim. It's been in the legal case ever since. So we're looking to have a resolution on that, hopefully this year. And on the back of that, we would kick off a pre-feasibility study with the work from the lab, as well as working towards environmental permitting for the project and advancing it.
Right.
So that's it for the presentation there, Tim.
Okay, great. Well, thank you very much. Yeah, very interesting. Obviously, the technology and one of the largest undeveloped gold and silver deposits around. I do have a few questions kind of to follow up. First, looking at the metallurgical test work, what work still remains to really demonstrate that this will scale up well and work at the mine site level?
Mm-hmm. So we have, like I said, the large columns underway, and they're going to do a pretty good job of demonstrating the oxidation. We've already learned everything we need to, I think, to go do it on a pilot plant, and that's really what remains. We think the market will be a lot more comfortable if we've got a pilot plant. I'm comfortable, but that's because I ran it at 25-foot heaps in Nevada for a couple of years, and we poured gold and silver and all that, but no one can go visit that anymore, right? That's 6 years in the past and buried by COVID and change in management. So the technology is with Metates, and I think what we'll be doing in the near future is developing a pilot with one of the partners that JP mentioned that's got infrastructure and permits ready to go. Metates wouldn't be a bad spot for us to do one either. But those plans are still in development. But I think that's one thing we've got cooking that'll be beneficial.
Okay, great. And you had mentioned that you're evaluating other projects where you could potentially use your technology. What kind of agreements would you look at in terms of licensing, and or would it be, I guess other types of structures in terms of agreements for those projects? And also, what is potentially the timing on that to implement some of those projects?
Yeah, that's a very good question. So, there's really two directions we could take with the technology. The first is sort of a royalty-esque streaming process. And that is, standard. You see technology companies on the other side on the copper space. They're working through that sort of pathway, several of them. And what that really entails is, we'll provide the technology, we'll get some sort of, let's say, an NSR on the project. Plus, we will have some of our staff on site running the technology, ensuring that it's always optimized. And so there'd be kind of a management cost plus there for the chemistry and the technical expertise on site. And then finally, obviously, there's always a delta between what recovery they can achieve without the technology versus with the technology. And then some, part of that delta would then be included. And then that's the one pathway. And then equally on the other side, and value wise, it'd be equivalent, because you just take the NPV of the licensing route and then figure out what that is today. And the other pathway is ownership, a minority stake in an asset with the equivalent value, and then we'll be part owners. And then when considering what we do, part of the discussion will be with that third party. Part of it would also be internally what we believe to be the risk profile. A project that is in North America that has a good rule of law, that's mining friendly, those sort of jurisdictions, I wouldn't mind having minority ownership. Whereas some jurisdictions that don't have that same rigor, having some licensing fee would probably be more likely our target pathway. But there's other factors that would also go into those discussions. There's an example. We actually just sold a property. I'll just scroll down. So late last year, we sold a property called Tatatia to Mexican Gold. And I'm just highlighting this because it gives you an idea of kind of how these valuations work. Intellectual property is still property, just like Tatatia is a property that we sold to Mexican Gold. And you can see here, Mexican Gold, we got almost 15% of the company through the sale of the property. So by putting technology into an asset, then we can own a percentage of the asset. In the case of Mexican Gold, they had about 800,000 ounces. And now we basically have exposure to 15% of that. And we did have an NSR too. So there's a pathway here, and there's a scale and a spectrum, and somewhere in between is what we're going to find. That's probably the best, value for the technology to put it in an asset, and then we'll work with the other side.
Okay, great. Now, obviously, you're operating in Mexico, and talk about jurisdictions of projects. What is the current political climate like in Mexico, particularly with regards to the mining industry?
Yeah, so there's actually been a significant improvement that we've seen over the last year and a bit. People remember that the previous administration, they had a pretty strong stance, on mining. Over the last 6 years, there's been very few projects that have received permits. I think the last one that had received a permit was Camino Rojo. And then there was a long period up until about late last year when Silver Tiger got their permits to go an open pit operation in Sonora. And so that was really the first example of another open pit operation getting their permitting. Earlier last year, almost a year ago, there was another handful of projects that got underground permits. So one was Matates underground, so that's Alamos Gold's operation. There's Avino's, La Preciosa underground, and then there's some Mexican companies as well. So there's been a real switch over to understanding the importance of mining in the economic tapestry of Mexico. And you can see that, in discussions that many people have had, Caminex, Kencham, even us with the government, they've been really pushing for getting permitting moved forward and getting permits for projects and companies. Even us, looking to get an exploration drilling permit on a project. Those things come a lot faster than they used to, which is very helpful. It's really starting to open the doors now to exploration and development in Mexico, which is a breather for a lot of us in the country.
Great, great. Absolutely. Now, you've recently raised about $20 million, as you had mentioned during the presentation. What are your plans for those funds?
Yeah, so a major part of the focus is Metates. So that's the work that we're doing in the lab, the work that Justin was talking about. Also, the next steps of that work. So looking to continue to advance it, looking at, opportunity of a pilot facility. There's also the work that we're doing that's going to underline a pre-feasibility study. Some of that work needs to be done now before we actually kick off the real pre-feasibility study. But gathering data and information now will be helpful. And so a lot of that stuff is kind of ongoing in the background. We're really waiting for a positive resolution on San Vicente 3 to really kick off the pre-feasibility study, which would then be really that very next step that we're looking to do. There's still work on site that we're doing on the environmental side, water well, climate, to continue to keep that baseline study up. So there's a lot of Metates involvement with the money, and the other part of it is towards the third-party test work, right? We really believe that Metates has a finite life to it. It looks like it's going to be a generational mine. We're talking decades of operations ahead of it. But eventually every mine does end, where technology then provides a pathway that's more open-ended. So as you saw earlier, there's 580 million ounces that are out there. And we really believe that the technology, as we continue to advance it, that it's going to really open the valuation for that. And so a lot of that funding is going to go to Justin and his team to continue to fill that pipeline, advance the current third parties to the next phase as we're moving to monetize them in the next few years here, and continue to build out our pipeline for the technology.
Okay, great. And kind of for an overview and kind of a closer, you had mentioned obviously in the presentation, but what are the upcoming milestones and potentially news items that we might look for from Chesapeake in the coming months?
Yeah, so most important thing, keep your eye out for an update on the work that we're doing with Metates with the metallurgical test work, so phase 3. We're hoping to have those out in the next couple months here. So just near the end of Q1, early Q2. And then following that, like I said before, the third-party test work probably mid-year, and then follow-on updates as we advance those. We're hoping to continue to advance bringing new companies in, so updates on that side when it comes to the pipeline. And like I mentioned, Lucy, we'll have an update on the exploration work that we're doing there. And a lot of people, they're very excited about the potential for Lucy, as well as management or board. And so we continue to move that forward in a very logical and taking into consideration capital allocation, and then just moving it in a stepwise approach to continue to advance that one.
Great. Great. Well, thank you very much for the presentation, and lots to look forward to, and very exciting times here, obviously, with gold hitting $5,000 an ounce and silver at least briefly popping over $100 an ounce, but still, obviously, price is very strong these days, and exciting times to be in the precious metal space. I'd like to thank Jean-Paul Tsotsos and Justin Black from Chesapeake Gold for presenting today. And thank you, our viewers, for your time and attention as well. Have a great rest of your day and happy investing.
Thank you, Tim.
Thanks, Tim.